All right, let's cut the crap. There's an indicator out there that this man has discovered that predicts the exact price of Bitcoin with a 90% accuracy over the last 4 years. And it's holding true to today. And why is this so exciting? Well, one, you can make a lot of money if you can predict the price of Bitcoin. You can short it when it's going down, long when it's going up. But even more exciting, because that's probably going to get you 20 to 40% returns on your money, you can trade altcoins and altcoin seasons, which gives us the 5, 10, 50, 100, sometimes even 1,000x returns on our money, because the euphoria is there, mainstream's there, buying with trillions of dollars. We are sneakily stacking that cash and getting out. So I'm going to show you exactly who this man is, exactly what his theory is, and how accurate it's been, which is, it's mind-blowingly accurate. This is, I feel almost morally compelled to bring you this video because it's the 80-20 of everything. Everyone's going to talk about all these tariffs and all these other news stories that is bringing down or up the price of Bitcoin, when if you just pay attention to this one indicator, you will literally be in the top 0.01% of market predictors. So let's not fluff around. Hit that like button below for me and I'll show you this indicator. So we're starting on Bitcoin, which is knocking on the door once again of 110,000 US dollars. Over the life cycle of Bitcoin, we've had 3 big runs, one in 2017, which doesn't look so big anymore, one in 2021, and the current one in 2025 and 2026. Now, like I said, there's a lot of fluff and a lot of crap out there trying to predict when's Bitcoin going to have these massive pullbacks, when's it going to have these massive pull-ups. And let's go through some examples of this crap. Bitcoin dropped like a stone. This is historic examples, by the way. This is not right now. These are all over the last 6 years. News stories trying to predict why Bitcoin is going up and down. 25% tariffs on Mexico, Canada, and 10% tariffs on China. Therefore, Bitcoin dropped. This one here is US job data fuels Bitcoin drop of, I think it was a 7% drop in the price of Bitcoin back in 2024. This one here, the environment, climate change. I don't know if you guys remember that one, was the cause of a Bitcoin drop. This one here, they're blaming miner sell-offs, crypto miners. Has increased selling pressure because all the miners are trying to sell their Bitcoin and get out. That's why crypto or Bitcoin is dropping. This one here back in 2024 as well. Bitcoin down 10% immediately at the outbreak of the Iran-Israel war. And there's another one here. Bitcoin value tanks in $1 trillion market shock after world's biggest $1.5 billion crypto high. So FBI confirms a prime suspect. You can see they are literally blaming everything and anything for the retraction in Bitcoin. Now, I'm going to say here, there is going to be some things that may trigger a backward step in Bitcoin, but there is an underlying current that is 100 times stronger than any of these news headlines. And a lot of the time, Bitcoin will retrace in price and people will look around for the negative news headline and be like, oh, it must be that. And so the big tidal undercurrent that dictates the price of Bitcoin and almost the price of every single asset in the world is something called quantitative easing and quantitative tightening, which leads to something called global liquidity. I'm going to go through this quickly with you and then give you all the examples so you can see how powerful this is. So the government has 2 buttons. They're basically like a binary robot. If they want more money in the economy, they can literally have quantitative easing where they print more money, they loan out more money, they reduce interest rates, which means more money is flowing into the economy. There's more money for it to flow. People are more likely to spend it and borrow if interest rates are low. They also have another button that they smash. If inflation is getting too high and they want to pull back the excess liquidity, they will have quantitative tightening. And you can see what happens when quantitative easing happens is asset price impact. Asset prices typically rise. Stocks, real estate, crypto. When they tighten the money supply, asset prices are typically going to fall or stall. And of course, if you know Ray Dalio, if you know Raoul Pal, this happens in a cycle like this. This goes back to 1968 here, where quantitative easing happens and more money gets put into the economy, and therefore all the asset values are going to go up because that money has to be distributed amongst the assets. People are going to invest that money into actual assets, real world assets. And that's where things like gold and Bitcoin and everything goes up and we all get rich or asset rich. But then what happens is there's quantitative tightening, and you can see as the money leaves the market, as interest rates go up and the Fed wants less people spending money and they really want to pull in that waistband, well, prices of assets are going to fall. And this has been the way for 60 plus years. And if you look at any real scarce asset, something like gold, you can see it's almost just exactly performed to the point of monetary inflation, which, and if you don't know what monetary inflation, by the way, guys, governments will literally just print money out of thin air, not just the US government, but all governments around the world. And all that extra money literally has to find itself an asset to go into. Otherwise, it's going to be diluted again in the future by more money printing. And Michael Saylor talks about monetary inflation being the true cost of capital, which is about 12% a year in the US, and how a lot of assets, most of the assets that people invest in, will not actually outperform monetary inflation. That's why life and everything around you is getting more expensive, because the money that you're holding is getting less and less valuable. The harder the asset and the more scarce and more impressive technologically the asset, the more it's going to soak up that extra cash. So you can see Bitcoin leads here with about a 60% annual return over the last 4 years. If you blow it out past 4 years, it doesn't even fit on that graph. It's just like 400, 500, 600%. And you can see this man here, Raoul Pal. I don't know if he was the originator of this theory, but he's as far back as I can trace it, which is basically that the M2 money supply, the amount of money available in the world, the biggest determination, it has the strongest correlation by far than any other factor out there. And therefore, because rising M2 money supply, which is literally this on the global liquidity, this black line, you can see we're down here in 2024. We are climbing this global liquidity as we speak. India's printing, China's printing. The US is not yet printing, but everyone is anticipating they're going to be printing soon, which they have the strongest effect on these assets. And Raoul Pal says that crypto will become a supermassive black hole, sucking in all this extra money. Now, this is Raoul Pal on Twitter. If you don't follow him, come and follow him. He's an absolute magician with macroeconomics. He says, I know many of you want to see the updated version of Bitcoin versus global M2 chart. Here it is, just a very small part of the weekly macro investing tool MIT as part of his membership. It's time, give or take a few days. Why does he say that? Because this goes all the way back to 2023 when Bitcoin was sitting at $40,000. And you can see the blue is the Bitcoin price, the white is the M2 money supply. And you can just see this insane correlation over the last 2 years. And what's exciting for us now, and that's what we're all waiting for, is the M2 is now skyrocketing. Now, why can we predict the future with M2? Well, there's something called the Cantillon effect. Now, you can go ask ChatGPT about it if you want more information, but basically, when the US prints a bunch of money, they give it to certain people first. And by the time the normies, the mainstream, and the retail investor, people like me and you, get our hands on it and then want to buy an asset with it, it's going to be between 70 and 110 days before that money really trickles down to us, which it's a really bad thing for the economy and bad for people like me and you, because the money has lost most of its value by the time it gets to us before the doubling of the supply actually realizes itself in the economy, before people know exactly what's going on. Now, Raoul says, not sure, looks cute, might delete later. Maybe, just maybe, it was this easy all along. That's a banger of a line that he's got. If this works, it would definitely prove that liquidity is the dominant factor still in markets. Not tariffs, not politics, not rates, not climate change, not the whales, not anything, but, he says not insert whatever narrative you're talking about, but literally liquidity. How much money is being printed in the world? How deep are we in the quantitative easing cycle? And you can see right here, this is projected out to $140,000 per Bitcoin. This guy here is pretty awesome on Twitter as well. Colin Talks Crypto. He's got 71,000 followers. He basically, all of his tweets are talking about this thesis. And I mean, House of Crypto talks about this too. And it's just people who are onto a truth with a 90% accuracy, they're just starting to blow up right now, because people are like, wait, I've been listening to 100 different people. Most have been wrong. You guys have been right. And this is sort of being distilled. All the crap's flying off to the side. And we're like, okay, Colin Talks Crypto, Raoul Pal, Peter from House of Crypto, they're all onto something that seems deeply true by this correlation. And you can see this here is projected out at $180,000 per Bitcoin. You can see this climb was perfectly nailed at the bottom here. I think it was a $76,000 turnaround as the M2 started going up again. And remember, guys, US still hasn't started printing. Once they turn on those money printers, which you can see there's been some problems with Doge not being able to make those cuts in the economy like Elon and Trump wanted to do, and they're sort of turning back to printing money. So this could keep on going up. So we want to keep an eye on that. Now, I wanted to zoom in a little bit more, and this is a screenshot from Colin Talks Crypto, but you can see over 1,095 days, there's an 82% correlation, and over 1,095 days for that 108-day offset, and this is the different offset, because people are like, how long does it take for that money to get down into the normies and the retail hands? Well, some people think it's 70 days, some people think 108. You can see the different correlation for each of these projections, but you can see it's about 80% over 1100 days for those offsets. And you can see in here at the 1 year mark, it's a 91.4% correlation. You can predict the price of Bitcoin at a 91.4% accuracy. Absolutely insane. Now, I will say, and this was actually interesting to come across as I was researching this video, Raoul Pal says there's actually a second factor in here. He says crypto is essentially a global liquidity play, which is what we talked about, but also in the red up here, a technological adoption bet, because it's going to follow the global liquidity, but it's also a superior technology. It has always been thus. The global M2 as a proxy for liquidity drives the cycles, and adoption drives the secular trend. You need to know your time horizon and your risk tolerance in order to know what bets you're going to make. That's what this video is all about. But the fact that it is also a technological superior asset is going to make it go up higher than something like gold. So you can see Joe Burnett says, imagine buying Netflix when Blockbuster was 12 times larger. Now multiply that opportunity by 1000x. That is Bitcoin today. You can see Bitcoin at the time of this was about 1/10, even less than a tenth, maybe 1/11 of the gold market cap, despite it being far superior in terms of technology and in terms of a store of value. And Michael Saylor said in a podcast I listened to recently, which was hilarious, it's just like the only advantage gold has over Bitcoin is it had a 5,000 year head start. But Bitcoin, as you can see by the ETF numbers, is rapidly climbing. Okay, cool. So maybe we will. We're currently at $108,000 Bitcoin. Maybe we'll hit that $200,000 level. But what a lot of people are thinking, including someone like myself, if I put all my assets into Bitcoin and I had to try and time the top before it had a retracement as M2 and quantitative tightening comes, I'm not going to be making it out of here with Ferrari, Lambo, yacht sort of money. I'm going to be doing way better than investing in the stock market or real estate or something else. But a lot of us are here for those crazy 100x gains. And if we're spending our time here, we might as well cash in on them because someone is going to be hitting it. And therefore, on this channel, if you haven't seen this before, do hit that subscribe button because we like to play further down the risk curve. We use Bitcoin and its liquidity cycles as the music to our dance. But we're in here dancing with the 4x's, the 8x's, the 20x's, and the 100x's, which are tokens with strong influences behind them that have lower market caps. You see something like Altura, I think it's got like a $20 million, $25 million market cap here, which means, and the math is going to sound wrong, and it is wrong because I'm making it up, but you have to understand how liquidity works inside of each project. If there's only $1 million of liquidity in there and someone puts $1 million in, the market cap is literally going to double or even triple. So with $1 million of buying Altura, you could go from a 25 mil market cap to a $75 million market cap, and your $10,000 could go from 10 grand to 30 grand. But if you put $1 million into Bitcoin, it's not even going to budge the price because it's got such a high market cap and such high liquidity that you can't hit the multiples like the 5, 10, 50, 100x's that we're aiming to hit further down the crypto whip. So let me show you this with some examples. This is the Bitcoin price, as we've seen a couple of times. I want to show you, and you can see it's $2.15 trillion total market cap. I'm going to compare it to Solana. Zoom in to when Solana was created here. You can see Solana is in orange. Now Solana has a market cap, I believe, of about $60 billion, which is way less than Bitcoin. And you can see if we go to the crypto whip, Solana will be way more down here in the 3 to 4x range versus Bitcoin's massive $2 trillion market cap. So if we come back to here, you can see over the last couple of years, Solana has had like a 700%, and even up to here 1,000% returns when Bitcoin had a 200% return. So it's going to mirror. Remember, Bitcoin is the music, but Solana is like a leverage play on top of Bitcoin. Now, if we go further down the crypto whip and we start with Solana, which, okay, has a $90 billion market cap, just over $100 billion fully diluted value. But if we take it to a meme coin, like I like the SPX 6900, this is a meme coin I talk about all the time on the channel. You can see once again, because it started as a tiny meme coin, you can get crazy returns, like a 726,000% return in the same time that Solana did is that a 20,000% return? So these are crazy numbers because we're starting from absolute minuscule amounts like 0.001 cents. But you can see even if you average this out and you divide it by 100, you're still going to get way more volatile, higher returns from lower market cap. So make sure you do hit that subscribe button because we're going to be investigating all these way lower market caps down this end of the risk curve as old season takes off, as Bitcoin follows that liquidity cycle. Also, if you want even more, we do have an inner circle where we go way deeper into these topics and we even follow the top influencers in the world who can actually impact the prices of tokens when they tweet about it, or when they make a YouTube video about it, or even when they buy it with their own wallet, because we track their wallets, their portfolios, and their social media to see exactly what these influencers and best traders in the world, someone like Crypto God John, who was courtside at the Knicks game, was sitting next to the CEO of Goldman Sachs, probably paid 100 grand for that ticket, and literally in the last bull market, he put $3,000 in and turned it to millions. So this is the beautiful opportunity of crypto. We want to find the people who've done it before us, track their wallets, portfolios, socials, see exactly what moves they're making, so we have the ability to copy trade it before it is too late. We want to be in that 100x, 50x, 10x zone, and not be the retail exit liquidity that a lot of people, majority of people by definition, are. So Inner Circle link is in the description below. Love to see you in there. Thanks for watching. I'll see you in the next video.